Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday, the 16th of December. So as the month flashes past, let's have a look. Well, yesterday we had the FOMC reports, slightly positive in terms of looking like it could well be the three interest rate increases. The negative aspects of it was when it would start. It still very much looks like May, the earlier stages of potential changes, but that's forecast by traders as opposed to the FOMC themselves. The dot plot just gives you an end of year figure, which, as it says, gives it gives you a room for three interest rate increases. So where to what we got in store for today, important aspects. Let me just bring up the calendar here for today, and you'll see we've got the Bank of England. Well, before that, actually, this morning, just be wary, we got the French and German flash services, manufacturing services data coming out. We've got the UK data at 9:30, so a bit of data coming out this morning that you should be aware of. Of course, then 12 o'clock we've got the Bank of England meeting. They're expected to leave things pretty much alone, even though the time before last it was suggested that that they would increase rates. Last time, well, that hasn't happened. It's very rare for them to increase rates into December, and with COVID flying through, it's very unlikely, I think, now. So everyone's expecting rates to be pretty much left as they are. It's just whether in the statement and summary whether we see any changes to the statement. For the Europe, there's I can't remember who announced it yesterday or the day before that inflation is now expected to be back below 2 by 2023, and that will pretty much meet their targets. And I've got a feeling they're just going to be quite neutral in terms of what they say today. Say quite neutral, but quite dovish. So I think the dovishness will continue there. They've done their best to kick it down the street, but that can still get kicked. However, that hasn't stopped when you look at the technicals. The dollar giving some back there overnight, since the data itself was released. Not massively a surprise, because generally the data gets priced into the markets. It's really dependent on what happens today in terms of where these markets move today. In fact, let's just have a look at the euro there, and the euro is charging ahead at this stage. Right, let's just run through them technically. So what have we got then? Yesterday ended up as a positive day on that late rally that came through, and we've got a continuation sitting in there at this stage. The wedge still sits. It's had a break of the lows there, but the patterns themselves may be pushed out the water when it comes to the news later. But at the moment, it looks like the euro's certainly gaining, and well, won't be surprised if it pushes out the other side at this rate. It's got no reason to particularly fundamentally to gain, but technically this is what happens at times. Markets go the other way to where you expect them, priced in. Some traders reacting to this, stops being taken out, short squeezes going on, whatever it takes. But there's not a great deal of logic in what's happening here. Anyway, I will be looking at resistance personally around those prior highs there, the R1, see what happens. If I get opportunities, I still will look to sell at some point this euro. It may be post news now. Yesterday was a choppy old day leading into the news. Very little action happening until later in the day there, and we may get much the same again today. The pound, let's just go back to the dailies on the pound here. The pound, well, yesterday bullish looking sort of bar there. We could see a continuation run through today. It too was choppy, but for periods it had little trending periods, trying to break out the highs there. Looking more positive again, potential upside to come through here. It's similar sort of reversal bar there sitting in. As I said, we could see further upside occur. Dollar yen. Okay, another currency which, well, actually this currency hasn't gained in the same way so much. In fact, it's lost against the US dollar here, which is quite right in terms of if you look at two currencies or three currencies that shouldn't have any gain from the news, is the euro, the yen. They shouldn't gain from the news. Sorry, two currencies. The US being the third one, which should gain, but all the same, well, the yen has lost some distance here. It's pushing with the dollar pushing up against it, and holding up pretty much against it. Consolidating where it is at the moment. It's too messy to be doing too much with. You could be looking at the trend line across the highs there and taking a breakout. I just think again we're back into chop potential through a lot of today. It'd be nice when it's all cleared out of the way and we just got the yen, the Bank of Japan, to report. Aussie dollar, well, again, solid day yesterday. It was running pretty solid throughout the day. It did have some retracements, but it looked far more solid than most others. That retracement came later in the afternoon there, but well, again, it's pushing up pretty solidly at the moment. High low just confirmed in there, or that low didn't take out the prior low there, so high low just confirmed as it takes out, and we sort of potential to push on. Whether or not we stall around the 71.80 area, we'll see, but potential to push on with the Aussie. It does look still one of the strongest. Canadian dollar, quite the opposite it has been, apart from, well, yesterday it eventually turned on the news and is capitalizing a little more than it probably should do, but that said, when you look at the exchange rates and potential changes in rates, the Canadians are probably a step ahead. Bearish reversal, key reversal bar here on the 4 hourlies throughout that news coming out, and we've seen a follow through since. Whether we're going to see just a continuation of that, well, it's into support, into its 60-minute 100. It's nearly into its daily S1. Might struggle where it is, although it does look weak here. It's not necessarily a place where I would want to be selling. Given the opportunity of it being in the morning, I'd like to have been selling back here somewhere, but this has moved on too far for me, and I've missed the boat for now. Okay, that's the currencies. What's gold up to? Wasn't doing too well last night, but has picked up. It sold off like everything else here. That's just come down the time up the time frames first. Not necessarily a massive key reversal there, but let's just look at the RSI there. The MACD, probably divergences more so in the RSI than the MACD. The smoother MACD settings I've got on here, not suggesting so much, but a bit of divergence on the RSI. Again, we could end up in this sort of range. It has and is pushing up back towards its 500 MA here, and it could well continue. But I would suggest that would be a sort of potential choking point. Most of the news was there, as I said, for the US, making it potentially stronger. However, it's just the final detail missing in terms of when the rate changes may come, and this is showing its hand in these markets. Oil, well, again, a winner, and as the dollar was sold, oil pushes up, and that's what we get. Commodities adding increase in value. This doesn't look massively convincing. It hasn't quite pushed into a new high to give a divergence. It just looks a bit soft today. At the moment, it does have the daily pivot below, which could be a draw. It's hardly a solid movement when you look at the euro still pushing up, the pound still pushing up. In terms of currency, still pushing up. Well, this might get there if it can break above the highs there. Well, there is a lot of resistance. There was a lot of resistance around that 72, around about the 72 whole number. Watch out for. That's oil. Okay, switching markets now. Let's just switch charts and let's start off. What time is it? It's 8 o'clock. So we'll have feed. So CSI 30, 300, big pardon. Well, seeing markets positively kicked through, bit of follow through from the US markets here. Likewise, Nikkei pushing up solidly, more positive there. There's money running into these equities at the moment. I was quite bearish looking at the Nikkei yesterday when it was sort of selling off down here. It looked like it was running for another sort of back towards the lows. To be fair, it's now, well, it's somewhere in between. There's a real solid wedge forming, and I would just watch carefully if I was long, which I'm not on this market, but I just watch carefully the upper trend line here. It may well provide a bit of resistance, but for now, more bullishness may follow through. The FTSE, it's actually got today's date. Yep, that has opened up and it's charged up massively. Straight away the FTSE's up, so I would expect, there we go, DAX to be following suit. Gaps up on the DAX. That could still, if the markets turn around, there'll be a nice gap chase, I'm sure, but maybe just too rich for most. And the CAC is also pushing up there and looking a bit more solid. So with these markets, a push back above the prior highs here. Could see or near-term highs, sorry. You could see markets running all the way back towards the highs. I don't get overly excited. I'm not getting excited about it much at all, really. When it comes to trading, I just trade it. But I sort of in the longer term, I'm not too sure these are going to hold up too well. However, they're pushing up. S&P's pushing through its prior highs. Most of them. Well, is today going to be the day it puts in a new high again? Potentially, it's taking the opportunity at the moment. Nasdaq struggling still with that resistance point at sort of key level. At some stage, surely it's got to knock through there. It keeps on tapping on there. A decent charge, maybe even this afternoon. Could see that broken and a run up towards the prior highs, and again potential new highs. The Dow was just lagging a little bit here, but still pushing up quite solidly yesterday, and looking, as I said, like it's got a bit more potential. Break back above that 36,172 area. Could again see even greater gains made and new highs. Okay, finally, crypto. Sorry, there's questions coming through. I'll answer those in just a moment. Crypto side of things, well, expect some bullishness coming through on these if I can click on them. Slow feed there. Oh, not much at all actually. This is surprising. It's quite surprising, having looked at the other markets. The currency is pushing up, and we've got actually Bitcoin actually. That's a suggestion that it's quite a weak market still. There's some money not really flowing into Bitcoin. Ethereum seeing a bit of a gain there and a bit of a reversal, and potentially more upside. But sorry, just coming back to that. We saw the move up yesterday evening, but not pushing up on Bitcoin there. So say just a sign of weakness, and with Ripple the same. So only Ethereum of the three that I'm looking at there. Let's just look at across the market a little wider. No, it just shows a weakness in crypto at the moment. So as much as we're seeing the US dollar losing strength against many of its other majors, when you look at it compared to crypto's struggling. Okay, there must be a reason for that. Okay, would there be a reason for, sorry, I'm just taking questions here now, just noticed coming through here. Would there be a reason for the EU and US markets? Which markets are you referring to in terms of diverging? The US currency markets dropping, and the EU's pushing up, the European, well, the ECB, Euro's pushing up. At the moment, I've already discussed that, so that's why that's happened. It's often what you see is the expectations in the market already, and they won't be correlated unless you're looking at the equity markets, which may be more correlated. But the currencies, one's got to go up, one's got to go down. Can't both go up. EU gold, etc. Upside, I guess, would be limited. Yeah, I mean, in terms of the euro itself, I'm very bearish on it still. I think they've done their best to keep the value of the euro, okay, the equity market. Well, they're both pushing up this morning, the equity markets. The pound, the London market's pushed up their FTSE. No, the ECB will pretty much carry on as normal by the looks of things, and the thing with Europe is slightly different to the US in terms of the US doesn't seem to be going through any lockdown at the moment, so quite a bit different there. Can you buy Citigroup? Yeah, you can buy it any time you like. I'll show you why you shouldn't though, but I mean it might be doing something completely. It's alright, we were looking at a few other stocks yesterday, and whether it can't even hold its own, Citigroup, on a day that everything else is having a bit of a rally. It's sold off. There you go. That's how weak Citigroup is. I keep on talking about this. It's a very weak chart at the moment. Technically, fundamentally, I don't know what their situation is, whether they're having problems, but certainly we're seeing it sell off. We might look at these cheap old shares at just $446,000 a piece. They're good value. Here's a decent market if you can buy some. There's the place to be buying them at that sort of price. Maybe they own 5% of Apple. It's Berkshire Hathaway, by the way. Okay. Ironically, they're actually coming off a bit. Right. And that's it for me, pretty much. Sorry, I've digressed a little bit there into stocks at the very end, but I think I've covered everything. I wish you a great day's trade, and I'll catch you tomorrow. Bye for now.